In a significant development, President Donald Trump has announced the postponement of a proposed 50% tariff on European Union goods, originally set to take effect on June 1, 2025, now delayed until July 9, 2025. The decision follows a direct appeal from European Commission President Ursula von der Leyen, who requested additional time to facilitate trade negotiations between the US and the EU. Trump confirmed the extension in a Truth Social post on May 25 at 6:15 p.m. EST, stating that he agreed to the delay to allow for rapid talks aimed at securing a potential trade deal. This move comes amid heightened tensions in US-EU trade relations, a partnership that represents the world's most significant trade relationship, with annual goods and services trade flows surpassing $1.6 trillion. The tariff delay marks the latest chapter in Trump's unpredictable trade strategy, which has repeatedly roiled global markets since he took office earlier this year. Just last Friday, Trump had threatened to impose the 50% tariffs effective June 1, citing frustration over the slow pace of trade negotiations with the EU. That announcement triggered immediate market turmoil, with the S&P 500 and Nasdaq Composite dropping 4.8% and 6%, respectively, their largest single-day losses since 2020, according to Reuters. European markets were similarly rattled, with the Stoxx 600 index falling 2.6%. The dollar weakened against safe haven currencies like the Japanese yen and Swiss franc, reflecting investor anxiety over a potential escalation of the US-EU trade war. Trump's decision to grant the EU an extension has led to a partial market recovery, with European shares rallying early today. However, the broader economic implications of his trade policies remain a concern. The International Monetary Fund (IMF) recently downgraded its 2025 global economic growth forecast, citing Trump's tariffs as a key factor, and warned of a heightened risk of a U.S. recession. Economists estimate that even the existing 25% U.S. tariffs on EU steel, aluminum, and cars have already contributed to a predicted 0.3% drop in EU GDP growth. A further increase to 50% could exacerbate these effects, raising consumer prices on everything from German automobiles to French luxury goods and Italian olive oil, potentially stifling demand and disrupting global supply chains. The EU has responded cautiously but firmly to the tariff delay. Ursula von der Leyen, in a post on X, emphasized the EU's readiness to advance talks swiftly and decisively to secure a deal that benefits both sides. EU Trade Commissioner Mauro Efovi reiterated that any agreement must be based on respect, not threats, signaling the bloc's determination to resist unilateral concessions. Meanwhile, the head of the EU's Trade Committee, German MEP Bernd Lang, warned that the EU is prepared to implement countermeasures, such as counter-tariffs, if negotiations fail, a move that could further escalate tensions and impact American exports like pharmaceuticals and agricultural products. Public reaction to Trump's decision has been sharply divided, as reflected in the flurry of responses on X. Some see the delay as a strategic opportunity, particularly in the cryptocurrency space, with one user noting that the extension provides a dip window to invest in tokens like Scoin before potential market shifts. Others, however, have accused Trump of using tariff threats as a tool for market manipulation, alleging that he leverages these announcements to create volatility, buy stocks at low prices, and profit as markets recover. One post claimed that Trump's inner circle, including figures like Pam Bondi, sold $1 million in stocks just hours before his earlier Liberation Day tariff announcement in April, raising concerns about insider trading. Another user labeled Trump the grifter-in-chief, suggesting his on-again, off-again tariff strategy is a deliberate tactic to benefit himself and his allies. This latest tariff delay fits a broader pattern of Trump's trade policy, which has been characterized by rapid reversals and aggressive posturing. Since taking office, Trump has oscillated between imposing steep tariffs and granting temporary reprieves, often citing good faith negotiations as a condition for leniency. In April, he announced a universal 10% tariff on all U.S. imports dubbed Liberation Day, but later lowered rates for certain countries, including the UK, after securing narrow trade deals. His tariff threats have also targeted other major economies like China, where rates briefly spiked to 145% before being scaled back to 30% following a 90-day suspension agreement. These abrupt policy shifts have left businesses struggling to adapt, with companies like Walmart warning of price increases due to the cumulative impact of tariffs on supply chains. The stakes for the US-EU trade talks are immense. The EU already faces 25% US tariffs on key exports like steel and cars, with a 10% reciprocal tariff on most other goods. A failure to reach a deal by July 9th could see these rates rise to 50%, a scenario that would likely lead to higher prices for American consumers and retaliatory measures from the EU. European leaders, including French Trade Minister Laurent Saint-Martin, have expressed frustration over Trump's approach, arguing that his threats undermine the spirit of negotiation. Meanwhile, Trump's Treasury Secretary Scott Bessent has defended the strategy, claiming that the tariff threats are designed to create maximum negotiating leverage and force trading partners to the table. As the July 9th deadline looms, the world watches closely to see whether the US and EU can bridge their differences and avoid a full-scale trade war. The outcome of these talks will have far-reaching implications, not only for the two economic powerhouses but for the global economy at large, which is already grappling with the fallout of Trump's broader trade agenda. This is a developing story, and further updates will follow as negotiations progress.